Okay. Let's reconvene, and as members keep strolling in, while we will keep a running tally of where we go next. We appreciate the indulgence of the panel today, and we will begin the afternoon's questioning with the gentleman from Georgia, Mr. Westmoreland, for 5 minutes.
Thank you, Chairman. Before I ask my questions, I just want to be the first to thank Mr. Capiano and Mr. Garrett for their questions, and I want to follow along the same lines as my colleagues. I believe neither Mr. McGrath or Mr. Vanderweed could cite a relevant federal law or statute that gives the federal regulatory authority over non-CFI, non-bank subsidy insurance companies. But yet you continue to negotiate international insurance standards that you say will apply to all insurance companies. Now, to my knowledge, we still have state-based insurance regulation. Is that true? Yes would be good. Yes?
Yes.
Yes.
Yes?
Yep.
If you have no regulatory authority over 99% of United States insurers, what do you tell your international partners about your ability to enforce the rules to which you agree with in our country? How do you explain that?
Congressman, the first thing that we want to, let me start at the beginning if I can. International standards are not only for the United States. As I mentioned before the break, other countries are looking to the global standards to implement in their country. So our mission is to shape those standards in a way that reflects the perspectives of the state regulators, the Federal Reserve, the best interests of the United States.
What business do you have telling other countries how to regulate stuff when you don't have any regulation over 99% of the insurance companies here?
So it's important to understand that the international standard setting process is very much a global and consensus-driven process. The state regulators are, of course, very involved, the Federal Reserve. It's consensus-driven. The goals are promote financial stability globally. As we learned through the crisis, national economies around the globe are connected and affect one another.
Are any of these companies CFI? I mean, are they a problem? I mean, are they a threat to our economy?
Forgive me, Congressman, I'm not sure I understand your question.
Well, you're talking about financial stability, worldwide financial stability. How do these insurance companies play into that? They're not banks.
That's correct. Insurance companies are very significant participants in global and national capital markets. They're essential participants in financial services. The firms that are looked at for global purposes are firms that are massive, complex, sophisticated enterprises that are engaged in a variety of financial activities around the world.
But I'm going to go back to the original question. How do you explain to the people, the Europeans or the rest of the world, how you're going to participate in affecting standards for their insurance companies to operate under when you don't have any control over 99% of the insurance companies in this country? I'm a little slow. I'm from the South, and I understand that, but I'm just having a hard time getting that. And Mr. Vanderweed, if you want to jump in there at any time, I'd love to hear from you.
Sure. Thank you. We collectively, the states and the Federal Reserve and the FIO, negotiate the international insurance standards at the IAIS level. And as Director McCraith said, we're attempting to do that to advance the interests of the United States. The other countries around the table understand generally how the U.S. insurance system works. They understand that it is primarily regulated by the states and that the vast, vast majority of insurance companies are regulated only at the state level, and that the Federal Reserve only has a handful of holding companies that it supervises on a consolidated basis. So they understand that. But in our negotiations, we're attempting to make sure that the interests of the NAIC are reflected, the Federal Reserve, and also the FIO as we negotiate those agreements, and we're trying to make them to be in the best interest of America.
I know my time's just about up, Mr. Chairman, but Mr. McCarty, could you respond to my question? Maybe you can help me out a little bit.
Yeah, well, the NAIC was a founding member of the IIS, and we thought it would be very productive for insurance regulators in the United States and around the world to work together collaboratively, cooperatively, looking at ways of looking at risks, how we could supervise, set some basic insurance core principles for the developing world, the developing nation. But the genesis, the initial genesis, was to be a sharing of ideas, learning, looking at best practices, perhaps improving our own practices back home by looking at how practices are done around the world. Insurance is very different, as you know, from banking. It's very specific to an individual country and jurisdiction and products, and so we use it as an opportunity. Over time, the IIS, through the FSB, has been tasked with responsibilities of setting global capital standards. Obviously, that will have great impact on our country. For my purposes, the state of Florida, I get 80% of my reinsurance from global capital companies. So it's very important to me what standards are being set. Since we do represent 100% of the private sector premium, we think it's important that we have a role in discussing these issues and what impact they may directly have or indirectly have on our consumers of the United States, on our insurance firms, and of course back home to the people of Florida.
Thank you. And my time's expired, but I hope we'll do one more maybe round. Thank you.
Thank you, gentlemen. With that, we go to Mr. Williams, the gentleman from Texas.
Thank you, Mr. Chairman. Thank you all for being here today. I'm a small business owner, have been for family for 75 years. I'm in the car business. I'm a car dealer. I have to buy a lot of insurance. And I believe in the private sector. And listen to some of this testimony today, I'm worried to death about it. Am I going to have to deal with somebody overseas telling me what I need to insure my cars for and this and that, rather than my local insurance person? It's really got me concerned. And the other thing, listen to the testimony, I'm concerned that Mr. McCarty actually represents me in this dialogue, but you're really not at the table. You really don't have much to say, and that bothers me because, you know, I'm a customer I live with every day, and I'm concerned of where we're going forward, as you've heard, with a dialogue that you really don't represent anybody to have conversation with. So with that being said, let me say this, and I'll address my questions to you, Mr. McCarty. The United States regulatory system, I think we all agree, is very different than what we see in Europe and in other international markets. What do you see as the paramount interest of the United States when involved in negotiations or discussions with these international regulatory groups? I think you can probably be pretty simple on that.
Yeah, well, I obviously share your concern about what any potential impact that global standards would have
I don't speak
on the
German.
local market.
I don't speak Italian.
Yes, and that's why it's very important for the U.S. team, all of us, the Federal Reserve, FIO, and of course the regulator, to be partners at the table and to make sure that whatever standards are being set do not have any detrimental impact on our companies not only to do business in America, but do business abroad where more and more insurance is being sold. Our concern, I think, from a state regulator perspective is that there really isn't a voice at the FSB representing insurance interest. We respect our colleagues from the other financial sectors that are on that, but it would really be in the best interest of American companies and American consumers to have the regulators who regulate insurance actually have a voice on the FSB.
I agree. Would you say it's the job of the FIO director to represent the interest of the state regulators?
Well, my understanding of Dodd-Frank, the role of the Federal Insurance Office Director is to represent the United States at the IIS as appropriate. I think that's specific in law. I think the NAIC, by and through its directors and commissioners and staff members, participate in all levels of the IIS. The Federal Insurance Office does not represent the issue, the state regulators, but it does have a role specified under Dodd-Frank. And I think it's important to understand while we have our differences because we come from different perspectives and views, we all work very collaboratively, and we try to have a unified U.S. team approach, and we do the best we can to achieve that, to make sure that folks, small businesses back home are protected.
Well, it would work really good if you were there having a voice at the time of. As a representative of the state regulators, do you and the FIO director share the same goals to advance the interests of the U.S. insurance industry and state regulators, do you think?
Well, I've known Director McGrath for a number of years, and I've had a number of conversations. You know, we have different approaches. We have a approach at the NAIC, as you might be aware, a very transparent process for open and discussion and dialogue, pros and cons of developing positions. The Federal Reserve and the FIO are culturally different in that regard and how they make those. I have, in my conversations with Director McGrath, I'm very confident that he is very concerned about the role of American companies and is only interested in going forward that would protect the consumers of the United States, and that's been my best impression.
My last question real quick. Given the U.S. insurers are regulated by the 50 states rather than one federal or national entity, what do you think is the proper role of the state insurance commissioners in these international settings in terms of complementing the FIO director?
Well, I do believe as the regulators, I come from Florida, speak for Florida. I do speak on behalf of the NAIC. We do have a process for granting that authority, but by and large, we are still viewed as individual states. I think our voice in terms of what is appropriate in terms of establishing standards and for insurance, whether it's capital standards or group supervision, et cetera, our opinion should be central into that discussion. But we certainly understand the role that's been given by the Congress to the FIO, and of course our partners with the Federal Reserve, who are now also joining us at the IIS, and we're working as best we can to make this an effective and efficient way of protecting American businesses and American consumers.
Thank you for your testimony, Mr. Chairman. I yield back.
Thank you. The gentleman yields back, and with that, we go to the gentleman from Kentucky, Mr. Barr, for 5 minutes.
Thank you, Mr. Chairman, and thank you to the witnesses for your testimony today. Mr. Vanderweide, a question for you relating to the Fed's participation in FSOC and SIFI designations for insurers, and particularly these globally systemically important insurers. The question would be, what criteria was used to designate the 3 insurers as SIFIs?
So the FSOC publicizes a summary of its decision whenever it designates a non-bank SIFI, and that was true as well for the 3 insurance non-bank SIFIs that the FSOC has designated. They've also put out a public framework to describe the factors that they use when they try to assess whether a particular non-bank financial firm is a SIFI, and those procedures were followed in the process that led to the designation of the 3 U.S. insurers as non-bank SIFIs. I think the FSOC recognizes that traditional insurance activities tend to generate low amounts of systemic risk, but there are a fair amount of non-traditional insurance activities that are engaged in by those 3 firms, and those did generate some amount of systemic risk. Some of the key factors that were cited in the FSOC's decisions included the extent of short-term funding activities at those organizations, the extent of their capital markets activities, repos, securities, lending, OTC derivatives, which create interconnectedness with the rest of the financial system. Also, the runnable liabilities of some of those firms embedded in their insurance and annuities products, which would enable the annuitant or the insurance policyholder to potentially take out its money from the firm on short notice. But those are some of the factors that were.
And those factors, when you published the findings and the designations, did you Did you discuss the extent to which those factors or those activities that you deem to be more risky or systemically relevant, was there criteria that would send a signal to the insurance marketplace what a firm, a systemically important insurance company, could do to de-risk, to escape the SIFI designation?
Yeah, so I think the firms were informed at a deeper level beyond the public documents.
Yeah, and I'll just interject here, if you don't mind, just because it's the input from those designated firms and others in the insurance industry that there is a lack of clarity, significant lack of clarity as to those criteria and those factors, and what is required of those firms to de-risk sufficiently to be de-designated, if you will, from the SIFI status.
Right. So each of the three firms were given a much more detailed private explanation for the factors that the FSOC felt were indicative of their SIFI status. So I think they do have a pretty good sense of the kinds of elements of their balance sheet and business operations that did result in the FSOC's decisions. I do agree with you that it is very important that there be a potential de-designation process. It is not meant to be a Hotel California state. And it's important that the FSOC carry out its annual reevaluation process, which is written into statute, to give each of the companies a chance to go through that process.
Thank you for that answer. Real quick follow-up. As you know, the G20 directed the FSB to identify G-SIIs that would be subject to these international capital requirements. And the question would be, did the G20's work have any bearing or influence on domestic regulators' SIFI determinations, or is there any connectivity there?
No, they were very independent processes. I believe the FSOC designated a firm first, and then the FSB made their decisions for the entire set of global insurers and picked out 3 U.S. insurers, and then the FSOC came back and did 2 more later. But the processes were quite independent, and the approaches that the 2 organizations take, the FSOC and the FSB, were different. I mean, they're obviously looking at some of the same factors, but they have different approaches to how they assess the systemic footprint of an individual firm. For example, the FSB, the IAIS methodology is a little bit more algorithmic or formulaic. The FSOC's approach is a little more firm-specific, judgmental. But the
let me ask you a question. I don't have much time. Are the 3 firms that were designated SIFIs by FSOC, are they internationally active insurance groups?
Yes.
So they would be subject to this process. So you're saying you have independent and conflicting processes, one international, but you have an independent domestic designation process.
I don't think they were conflicting, but they were independent processes.
Okay. Real quick to Mr. McCarty, you indicated that preserving regulatory independence and diversity can serve as a buffer against contagion. Can you elaborate really quickly on that?
Absolutely. I think for all intents and purposes, if you look at insurance, the diversification of risk actually helps minimize systemic risk. And our concern is, as we move more towards the global capital standards and have a common assessment of risk, a common assessment of assets, that we're actually moving more towards emphasizing and potentially exacerbating systemic risk than getting away from it. So we think that being more jurisdictionally based approach would be more prudent in minimizing risk. And if I can make just one comment about the FSOC real quick, we're very concerned about the designation process, the transparency in the process, and making sure that the regulators that regulate insurance understand, because one of the ways we can address this is we can put more regulation, more policy measures, more capital, or another approach we can take is take away some of that risk, finding out ways of eliminating risk. The last financial crisis, we didn't know what risks were out there. If one of the roles FSOC can play is help us identify those risks and help companies eliminate that risk, so we're not necessarily exacerbating a situation and not just trying to address it through more regulation and more capital.
Thank you. Yield back.
Thank you. Mr. Vanderwade, I want to let you know that you gave us more information in your 2 or 3 minutes response here than all of the other folks that we've had in this committee when we asked that question about SIFIs put together. Thank you for your response. Next up is the gentleman from Florida, Mr. Ross, and then after that, Mr. Green wants to participate. So we'll start with Mr. Ross.
Thank you, Mr. Chairman, and gentlemen, thank you all for being here. I want to follow up on what Commissioner McCarty was talking about with regard to SIFI designations, especially for non-bank financial institutions. And I must put in a plug for a bill that I have filed that asks for the transparency for that particular designation, not only as to why they got in there, but how they can get in there and how frequently they can seek to get out of there. I also want to put in a plug because I've dealt with the NAIC, and I'm grateful to you, Commissioner, and to Senator Nelson, who is also here, for the efforts that you've been given to me with regard to private flood insurance, which I think is very important for consumers out there to have that option, and also with regard to another bill, also bipartisan, dealing with disaster savings accounts. As we are on the cusp of hurricane season starting May 1st, the more that we can incentivize private customers getting in and mitigating their structures, we know that for every $1 spent in mitigation, we save $3 in relief. And so I give that out as a commercial public statement there. But now I want to get back into why you guys are here. Commissioner, let me ask you something. With regard to the international capital standards, assume, if you will, that they are passed and that they are imposed on the individual states, which would require maybe even putting more capital, set aside more capital, maybe some more costs of compliance, but in any way a greater cost. Is this something that, as an insurance commissioner, would be expected to be allowed to be recovered in the rate that ultimately would have to be paid for by the consumer?
Well, yes, and actually it's a little more complicated than that, because if you do impose a capital standard, let's say it's a capital standard that is more in line with what we're seeing from a European model, as opposed to what we would say is a capital adequacy model, which we would be advocating. There are many complications. One is that you run the risk of less products, because those products will not be seen as viable under a different capital regime that may punish longer-term products that many American companies sell, particularly in the annuities marketplace. We also have to see some disruption in the marketplace, because there'd be visions of some winners and losers, and some people would gravitate to those companies that have the higher capital standards and may have caused disruption in the marketplace and unintended consequences. There are also potential of other unintended consequences, such as stagnation of growth, less products available, less senior products available in particular. So there was a lot of things that we have to take into consideration that would cause unintended disruptions in the marketplace.
And Mr. Vanderweed, are these any studies that you may have conducted in analyzing the impact of the IAIS capital standards?
So the IAIS capital standards are very much still in development. At this point, the IAIS has not even settled on a basic kind of framework for how they would approach the
But you would agree that there should be some type of impact study of
Yes, absolutely. We think the IAIS should be doing impact studies, and before we do any implementation of any international standards, we also need to do a very detailed amount of cost-benefit analysis to make sure they work for our country, our insurance firms, our insurance consumers. Okay.
And Director McGrath, I understand that you're going to be negotiating some covered agreements with reinsurers coming up soon. Is that something that, what's the status of that right now? And what your expectations are with regard to the impact it's going to have on domestic reinsurers as opposed to foreign reinsurers?
The covered agreement is a serious endeavor. We've never done it before. We're sorting through internal process questions. Before we negotiate, during any negotiations, we will work actively with this committee to ensure that you are informed. The outcome of any agreement is very, very difficult to predict. Of course, we haven't even commenced negotiations. But I can tell you the only way in which we pursue and reach an agreement is if it serves the best interests of our country, including U.S. reinsurers who might be operating within the European Union.
I appreciate that, and I appreciate the further guidance on that. Finally, Commissioner McCarty, is there anything that we can do? I understand, look, that we have probably the best system insurance regulation in the world, and nobody else has our particular models that have been provided for under the McCarran-Ferguson Act that allow each state to do that. I assume that there's always some problems and some issues but each state addresses that. Is there anything that you would recommend for us as members of Congress that we should be ready to be preemptive if necessary in the event of anything you see coming down the pipe with regard to IAIS capital standards?
Well, actually, I have a lot of confidence in the team that we have on the field. I mean, we're kind of new at this. The U.S. system is complicated and a lot different than the rest of the world, and it's very difficult for the IMF and others to really understand the complexity of the U.S. system and in the different parts that are involved. I think, confident to say that I think we do have a powerful voice. Mike sits as the chair of the technical committee, excuse me, Director McGray sits as the chair of the technical committee and made very significant progress in allowing a different path away from the market consistent valuation to include a gap plus approach. So the American voice is being heard, and I think if we continue to work together, I think it's not clear all the time just how much work is being done behind the scenes at the senior level as well as at the staff level of trying to work our way through to come up with comprehensive, cohesive U.S. positions. And I think if we continue those efforts and continue to report back to you with your oversight, that we will hopefully devise a system that complements the U.S. regulatory system and does not challenge the system we have in place that has worked so well for our consumers.
Thank you very much, Commissioner. I yield back.
I don't try to keep picking on Mr. McCarty here, but it seems like he always gets the last question. And so we need to keep our answers concise. But since we don't have very many people here, we're allowing the questions to go along. With that, we want to yield to the gentleman from Texas, Mr. Green, for 5 minutes.
Thank you, Mr. Chairman. I thank the witnesses as well. Mr. McCarthy, because you weren't quite finished, I'll yield some of my time for you to continue with your response, if you'd like. Because my question that I was going to lead with was one that deals with the international developments at FSB, as well as the IAIS, and how they work in conjunction with the state and federal levels. So can you continue, please?
Just to be clear, you're talking about the Financial Stability Board, the FSB?
Yes.
Yeah. Well, you know, we do have some concerns from state regulators' perspective about the FSB, since the FSB is really comprised of largely people who have a bank-centric view. We do have our U.S. representatives, and we feel very comfortable that they represent the U.S. position. But as the U.S. regulators of insurance, we feel that we should play a more prominent role and have a voice on the FSB. Our concern is that oftentimes the principals of the FSB view the insurance through the prism of banking, and we know there's a very different business model for banking and insurance, and that it would be very problematic for the insurance industry for us to have superimposed on us a regulatory regime that is capital-based, in bank-centric. And so having a voice in that arena would be very helpful.
Let's talk about AIG for just a moment. I'm sure there's been a substantial amount of discussion, but as you know, we bailed AIG out. It's about $80 billion. And also proud to announce that the government has been successful in collecting, which is a good thing. But with reference to AIG and the means by which we found ourselves having to bail AIG out, are there state or federal laws or regulations that would prevent AIG from doing this again?
I don't think there has been any more of a studied case study than ever been done in the history of the financial sectors that has been done on AIG. And I have had opportunity to discuss this with my colleagues across the different financial sectors. And so it's important to understand that the failure of AIG was not a failure of the state regulatory system. It was a failure of the regulatory system because of the Financial Services Division that was left largely unsupervised. It was under the Office of Thrift Supervision. They had a light touch, if you will, in terms of consolidated supervision. That, of course, has been remedied under Dodd-Frank. Those responsibilities have been under the Federal Reserve. I feel fairly confident that the Federal Reserve will not have a light touch when it comes to supervising from a consolidated basis the organization within the structure of an AIG or any other company under its supervision. So I do think appropriate steps have been taken, and I think that again, this is going to require the Federal Reserve and the states have been working together for years on, we really regulate very different aspects of a company. We look more at the insurance entity from the inside. They look more at the group. And I think, though, that with cooperation, collaboration, continuing to work with our colleagues, that we will be able to provide a structure to prevent a future AIG. But I'd like to emphasize once again that the way to address this is to identify risk, systemic risk in particular, and figure out ways of minimizing that so it doesn't put a risk to the greater economy.
Well, on that point, if we had been in a position such that there was a requirement to view the capital standards of the group at the group level, would we have been able to spot the issues that caused AIG to collapse before this happened?
No, I have been in conversation with a number of people on this subject, and it has been, from my understanding, that there is no amount of higher loss absorbency that you could have put in or contemplated that would have prevented the meltdown of AIG. It was not a matter of insufficient capital or an overlay of capital. It was a matter of supervision and quality supervision and identifying the risk and finding out ways to deleveraging that risk.
With my 15 seconds that are left, let me see if someone else would like to comment.
I'll just comment briefly that I think Commissioner McCarty has identified correctly the main tool that is now available to deal with an AIG problem going forward, and that is the FSOC has the ability to designate any systemically important non-bank financial firm and to hand them to the Federal Reserve to provide consolidated supervision and regulation of the entire group. And I think that is probably the most targeted tool that Congress has now developed to prevent a recurrence of an AIG-style event.
Thank you, Mr. Chairman. I yield back.
Gentlemen, yield back. Mr. Pierce is recognized for 5 minutes.
Thank you, Mr. Chairman. Appreciate the testimony that you've each brought here. Mr. McRaith, I think that we might talk with you first. Tell me a little bit about the driving compulsion behind this regulation of the insurance market. Where is that coming from? It's my understanding there's not a law that says we should do it. So what is it that is not functional about the system that says we need to start changing things?
Congressman, are you asking about the international standards?
No, I'm just asking why what's the underlying value that says now we got to start regulating this market? Why did your position get created? Why is the Federal Government getting into the market? Is that a fair question, Mr. McCarty?
Well, I think there are specific things under Dodd-Frank that requires the Federal Insurance Office, for instance, to identify gaps in insurance regulation in the U.S. marketplace, but also serve as a, quote, representing the U.S. government as appropriate at the IIS. And I think that that's the functions that the FIO is.
Are you alarmed at all? As a previous buyer of insurance for a business, I'm alarmed when I see the Federal Government come in, so I'm going to come back to you, Mr. McRaith. But does your agency, Mr. McCarty, see some reason for concern in what's coming out of the Federal Government?
You know, I think there are many. We obviously have concerns with a new partner in the arena, a new player in the arena, as to what role they will play and how much jurisdiction they'll exercise. So we are very guarded in making sure that state regulation is protected. We will do so with an eye towards collaboration and cooperation, but we certainly want to protect what we think is appropriately the Congress's view, and which was restated in Dodd-Frank, the primary role of insurance regulation by the states.
And so, Mr. McRae, you used to be a state regulator. Is that system not working? Is that the reason that you all are getting into it? Do you see your regulations being in addition to, on top of, or in place of state regulation?
Congressman, we are not establishing regulations or imposing regulations. Our work internationally is to take the best ideas of our state system, of the Federal Reserve, and to ensure that those ideas are reflected in the global standards that are set at the IAIS.
And you don't think that eventually those standards will seep down into the market here?
The only way those standards are implemented in the United States is through either the state system or through the Federal Reserve. International standards in the insurance sector have been around. The IAIS was founded in 1994. Standards have been around for 15, 20 years.
Mr. Garrett's,
this is not new.
Mr. Garrett's questions evidently eased into this area, and it didn't. The words I got back were not quite as clear cut. That there was this great delineation between the markets that in fact they're tending towards being the same. So you're just saying that's not true, that we're going to keep ourselves nice and clear. Because take a look at it from our perspective in the West. Back when we had local jurisdiction over local forests, we had operating Forest Service, we cut timber, the West thrived, had jobs there. The Federal Government got into the business of the forests, and now then 85% of the Forest Service is dead, 85% of the forest market is dead, the companies are gone, jobs have disappeared in our district. And what I see, anytime the Federal Government starts playing around with anything regarding business, then it tends to choke that business off. So when I sit here and talk and listen to Mr. McCarty saying that we've got cause for concern, and I hear you saying, oh, don't worry about it, I tend to believe I've got cause for concern rather than I don't worry piece of it. And just know that we in the West struggle because there's so much public land, so much public Federal Government involvement in the process is that they're choking off our economies one piece at a time, whether it's oil and gas, whether it is the Endangered Species Act using a spotted owl to stop all the timber, and later the Federal Government says, sorry, we shouldn't have done that. It was never the problem. Logging was not the problem. We're the ones that live at the end of that pipeline. So I'm concerned about the direction that you're headed, the fact that we've created your spot, and I'm concerned that it feels like is tending towards concerns that Mr. McCarty might have and his association might have, because I will be speaking for the people who buy insurance out there trying to just make a living day to day and hire a few people in the local area. That's what I don't want you involved in. Thanks, Mr. Chairman. I yield back.
Gentleman yields back. Now recognize the gentleman from Pennsylvania, Mr. Rothus.
Thank you, excuse me. Thank you, Mr. Chairman, and thank you, panel, for sticking with us. We've had a lot going on this afternoon. I apologize if any of my questions might be redundant. I hadn't had a chance to take a look at what other members have asked. But Director McRae, I wanted to start with you. When participating in international discussions on insurance regulation, and the United States is considering its position, how do you take into account the position of state regulators and the NAIC?
We have extensive engagement and consultation with the state regulators on a constant basis. So we have regularly scheduled calls, at least monthly. We have weekly, if not daily, engagement at the staff or leadership level. Meetings that are ongoing will meet throughout the day or during the day of the meeting itself to ensure that we're all aware of and on the same page.
Great. I want to flip to Commissioner McCarty and get your feedback. Would you say that the Federal Insurance Office and the Fed seek your feedback and represent states appropriately?
I would say that we have a very complex interaction with the Federal Reserve and the FIO. We have, as Mike has indicated, multi-level work streams working on the IIS and the EU-US dialogue on a number of issues. We do a lot of interaction, and we certainly would welcome the opportunity to provide them with our history and background on solvency prudential regulation in the United States. Mike, of course, is very familiar with that in his former position. We think that we are the subject matter expertise on this and would certainly like to give deference to that, but they have their own respective roles in this regard, and they make their decisions accordingly.
Well, have you proposed or are you considering proposing ways to improve coordination and representation when international insurance discussions come up?
Well, frankly, what started out as a relatively informal process has become a much more formalized process, and we continue to improve that. In advance of our IIS meetings, we have a number of meetings in advance of that to look at the different decision points that are coming up, find commonalities where we can agree, and figure out ways of strategically presenting those in the best interest of the U.S.
I wonder if Deputy Director Vander Weed and Director McCraith could maybe comment on coordination and ways to do things better. Are any proposals on the table?
So I think in the past months, we have increased extensively the amount of engagement that occurs amongst the FIO, the Federal Reserve, and the NAIC in the States on how we go about doing the international negotiations. It is quite important that to the maximum extent possible, we present a united American front in those negotiations with our European, Asian, and other international colleagues, and we're trying the best we can to do that. I think the consultations have been going quite well, and I think the collaboration is improved considerably as we've now entered into the more active phase of those negotiations. So I think the trend line is quite positive on increasing collaboration, and I'm reasonably optimistic that we'll be able to keep that increase going.
Congressman, my only additional point is that when we started a few years ago, we started for the first time in the history of the country integrating the national and the state perspectives internationally. We've learned as we've moved forward. We have a very rigorous, aggressive engagement coordination effort right now. We will, of course, continue to learn as we move forward, but we're in a good place and we'll only get better.
Director Vander Weed, do you expect to finish our domestic standards before the IAIS sets its standards?
I can't give you any definitive timeline on the Fed's development of its capital framework for the domestic insurance holding companies that we supervise. We are extensively engaged right now in outreach with U.S. insurers, U.S. insurance supervisors, to better understand how the U.S. State-level risk-based capital regime works and to measure the cost and benefits of various alternatives that we might take towards establishing those holding company capital requirements.
So as far as finishing our standards before the international standards are set, you can't make a commitment that say our standards are going to be first and then use that as a benchmark going in discussing the international ones?
Yeah, I can't give you a definitive timeline as to when we will complete our process. We are going
Would it be a good idea if we did that?
I think it's important that when we do negotiate those international capital standards, that we do have a good vision, shared vision among us as to the right outcomes. I think that's right. But at the same time, the pressure on us is we do want to get the domestic capital regime right, and it's a pretty complicated endeavor. We've got a very diverse set of insurance firms that we need to devise a capital framework for, and we don't want to hastily produce a rule that doesn't work well for those firms. So it's important that we get that rule right, and we don't want to excessively accelerate that process. But it is important. I think you're right. Your instinct is right that we need to, when we negotiate internationally at the IAIS, have a reasonably good shared vision of kind of the outcomes that we're driving towards.
Thank you, Mr. Chairman. I yield back.
Gentleman yields back. I'll recognize Mr. Green from Texas.
Thank you, Mr. Chairman. I would like to borrow some of the language from my colleague. I wasn't available to hear and see all of the hearings, so this may be redundant as well. But I do appreciate the testimony that I've heard. We do have a good many things going on today, I assure you. But with reference to competitiveness, not only nationally but internationally, I think that we all understand that we don't want American companies to be at a disadvantage. And specifically as it relates to the insurance market, there seems to be a notion that the regulators have a better understanding of banking than insurance law or insurance needs. What are some of the risks that are unique to the insurance industry? And if you've already answered, I beg your forgiveness, but I think it's good for me to hear it and for it to be repeated. Some things bear repeating.
I'll field that one. I think it is important, as the Federal Reserve devises its insurance supervision and regulatory framework for the 17 insurance holding companies that we supervise, that we need to make it reflect the insurance risks and the insurance business models of those firms. It is not appropriate for us to take a bank-centric model and apply it to those firms. The Collins Amendment in the Dodd-Frank Act had required us to do that on the capital front, but thanks to a congressional action in December, those shackles have been removed, and we're now free to implement a fully insurance-centric regulatory regime for those firms. Insurance is different from banking in a significant number of ways. I'll just mention a few of the key ways in which we think it's different. Insurers, particularly life insurers, tend to have longer-term liabilities than banking organizations, and they intend to engage in less liquidity transformation and maturity transformation. I think that militates in favor of a different regulatory regime. They also tend to have liabilities that are uncertain in amount. Bank liabilities tend to be of a fixed amount. The insurer's classic insurance liabilities are of an uncertain amount. The size of those liabilities will depend upon the eventuation of future mortality risks, longevity risks, morbidity risks, natural catastrophe risks. That makes insurers quite different from a bank. And the last thing I'll mention is on the asset side of the insurance balance sheet. Many American insurers, again, life insurers principally, have a separate account capacity, and that's a major asset class of many life insurers that simply isn't present on bank balance sheets. So there are a lot of ways in which insurers are different from banks, and we need to make sure that our regulatory and supervisory regime reflects those differences.
And you are indicating that you believe you're in a position to do this at this time?
Yes, we had been impeded by the Collins Amendment, but we feel like the change that Congress made to the Collins Amendment and the Dodd-Frank Act in December frees us up to devise a fully appropriate insurance-centric model for the 17 firms that are prominently engaged in insurance that we have.
Thank you, Mr. Chairman. I yield back.
Gentleman yields back. And before I recognize Mr. Duffy, I want to thank all of you for your patience. I haven't seen one of you all make a face yet when these different members are coming in, but this is something that's very important to all of us, and so I do appreciate your patience. But I did want to ask just a couple of questions. Mr. Vanderweed, is the business philosophy of international insurance companies or European insurance companies any different than what you might say the philosophy of a domestic insurance carrier might be?
Well, the internationally active insurance companies certainly do expose themselves to additional risks that the purely domestic firms do not. They also have additional diversification opportunities that the purely domestic firms do not. But in our work in the international regulatory space is to try to help make sure that we have a globally consistent supervision and capital framework for the foreign firms that operate in our markets.
Well, let me ask it a little bit different way. Is there a philosophy about what should happen if there was a failure? Who their allegiance might be to as far as what might happen to the assets of that company?
I'm not sure if I would draw a distinction between the.
Okay, let me ask you this. I know that our insurance companies, they are liable for the policyholder. That's who they protect. My understanding is on the European model that they protect the creditors and not the policyholder, that the policyholder comes after the creditor. And in the United States, the policyholder is first. Is that your understanding?
Yes, different international insurance regulators have different objectives for their regimes, and I think this is going to be part of the challenge that we will have collectively as we engage in those negotiations with the IAIS, is to make sure that our vision of the appropriate way to do insurance regulation is put forward in a powerful way and is convincing. But this is one of the challenges, not just in insurance, but in any kind of international negotiation, is to deal with the different objectives that different regulators have around the world and try to meld those into a framework that works, from our perspective, that works for America.
So you're committed, or whoever is doing the negotiating is committed to making sure that the policyholders are put in first place.
Yes, absolutely. That will be a key goal of ours.
Mr. McCarty, do you foresee, or do the state insurance commissioners have a fear that what they're negotiating is only for these international or companies that participate internationally? When they write the rules for that, is it your fear that you may have to apply those same rules to all the insurance companies that you regulate? And how would you do that? Would you regulate different companies in different ways?
You raise a very valid point. I think it's the concern that companies have, the large internationally active groups, that may find them subject to higher capital standards or different enhanced policy measures. Their concern is that would put them at a disadvantage back home, where they're competing, whether it's homeowners or auto or business liability insurance, medical malpractice, or you name it. So the concern they have is they're certainly not going to put themselves at a disadvantage, and would encourage that state legislatures apply those standards uniformly, which could have consequences in the marketplace, both terms and pricing and product availability.
Yeah, because you wouldn't want to treat one insurance company differently than you would treat another. And that's what I'm afraid would actually happen. And we want to make sure that those policyholders, the people that pay the premiums, are the first to be protected.
And can I circle back to something you mentioned earlier, which I think is the absolute key issue going into the discussions about an insurance capital standard, which is, what is the guiding principle? Is the guiding principle policyholder protection, which from the U.S. perspective is a ground-up, entity-based ring fencing? You ring fence those assets so they're available. The other concepts that you, as an ongoing concern or creditor protection, very different policy measures and outcomes depending upon whether you're predicated on the policyholder protection, which we think is key.
Thank you. Chair now recognizes the gentleman from Wisconsin, Mr. Duffy.
Thank you, Mr. Chairman, and I appreciate the panel being here today and for not making any funny faces. It's a new standard that we have in the committee. But I do appreciate all of your appearances. I plan later today to introduce a bill that I've been working on for several months, the International Insurance Standards Transparency Policyholder Protection Act. My staff has sent you guys all copies, or your teams copies, of the legislation this morning. I can't imagine you've had a chance to review it thoroughly and comment on it today. I understand that you're all fast readers, but maybe not that fast. So I was hoping to get some of your initial thoughts on some of our key elements of the bill. The bill establishes notification and reporting requirements for Federal regulators like yourselves to inform this committee and the Senate Banking Committee when you intend to enter into negotiations and agree to international regulatory frameworks on behalf of the United States. My bill also establishes a public notice and comment period so that all interested parties may make their voices known throughout the process. And my bill also creates objectives that regulators must meet during the negotiation process. These objectives promote the U.S. state-based system of insurance and our commitment to protecting policyholders. Hopefully you'll have a chance to review that after today's hearing, and I could get your feedback on that. But in regard to Mr. McGrath and Mr. Vanderwide, you both don't have an objection to keeping Congress informed on a regular, ongoing, codified basis, do you, Mr. McGrath?
we welcome the engagement with this committee, members of the committee, staff of the committee, Senate Banking Committee, and look forward to that engagement. We've had that over the last few years and look forward to continuing that.
But engagement might be a little bit different. I'm saying, hey, listen, we're going to systematically keep Congress informed. And so we know what information is going to flow from FIO, and you know what information we expect to receive, as opposed to a looser arrangement where we're just going to have an engagement. You agree that we should probably have some kind of system in place where we, on a certain timeline, are getting information in regard to this process. Would you disagree with that?
I'm not sure. I haven't seen your bill, so I don't want to comment too specifically, but I don't know why something like that would be necessary when we're happy to visit with the committee and the staff on a regular basis and happy to provide updates, engagement, share thoughts, and analysis as the work unfolds.
And I guess sometimes systems are important in making sure certain requirements are met and certain expectations have a bright line, so you know what we want and what we expect. And if you don't set up a process yourself on the flow of information, I think that we here can set up a process to say this is very clear for you, what we want to know in regard to the process and how it unfolds. Mr. Vanderwyde, would you have an objection to a proposal such as this in regard to keeping Congress apprised?
I think my views are very similar to those of Director McCraith. I think it is important for us to keep Congress very well apprised on a frequent basis of our activities collectively as we negotiate international insurance regulatory standards. There's no question that that's in the public interest, and we feel like we've been doing that. But if there's additional consultations or information that you need from us, we're happy to do that. But I haven't seen your bill, and so I don't feel like I could comment upon increasing the systematicness of the relationship in any particular way.
Okay, and I appreciate that. But both of you have an interest in keeping Congress informed. I do appreciate that, Commissioner McCarty. My bill would require FIO and Treasury and the Federal Reserve to consult with the National Association of Insurance Commissioners throughout the negotiation process. Do you believe that you have been kept up to speed thus far in the process, or the commissioners have?
It's been an evolving process, and as Director McGrath has articulated, I think we're in a good place now in terms of those discussions and negotiations. It wasn't a perfect process getting here, but I think we're in a good place. I have not had an opportunity to review the bill. The NAIC has a process for going through and commenting on legislation, but we certainly conceptually would agree with oversight. We are particularly concerned, sir, about the lack of transparency at the Financial Stability Board and the lack of transparency at the IIS. And if there's a way for Congress to provide some more transparency in that process, that would be welcome.
And I know my time is almost up, or I'm 15 seconds over, but you do believe that NAIC should be involved in the process and kept abreast of the process, correct?
Absolutely.
And why is that
important?
Absolutely.
Well, first of all, we have been in this business for over 130 years. We have a remarkably strong record of providing solvency for our companies and providing a path for ensuring that policyholders get paid even in a resolution of a company. We've withstood many financial crises, and I think we're on the ground knowledge of insurance regulation, which everyone knows is very different than banking and securities. And so for us to have a equal partnership at the table is critical.
Thank you. And I would just ask that you guys share your thoughts with me. I look forward to partnering with you and working with all of you to make sure we get a process that works for everybody and for our committee. So with that, Mr. Chairman, I yield back.
Gentleman's time has expired. I want to thank all the witnesses for being here. I think that at least what I've taken away from this hearing and the other information that we received, that what happened at AIG was nothing but greed, and a lot of people were making a lot of money. And as usual, And what the Federal Government did was way overreach to solve one very targeted problem that we could have fixed. But as people close to this administration have said, you never let a crisis go by that you don't move the ball forward. And so what Dodd-Frank did specifically with insurance companies and putting them under the SIFI rule and other things is you cast a net so broad that you caught all the little fishies that you were not intending to catch. And so as a result, we've got what we've got. And there's going to be all type of unintended consequences as there is with anything as complex as Dodd-Frank and all the many rules that is put on different businesses, that we wonder why we only had a growth of 0.02% in our economy. It's a direct result of the over-regulation that we have today. Our confidence is more into our state officials. I know Mr. McCarty was appointed, and I believe you may be the first appointed state tax commissioner from the state of Florida. Our tax commissioner or insurance commissioner is elected, accountable to the people. And Mr. Vanderweide, I don't think you're elected by anybody, are you?
No.
Mr. McRaith, you're not elected by anybody, are you?
No, I'm not.
Most of our state insurance commissioners are elected and they're held accountable to people. And therefore, they put those people first. So thank all of you for your testimony. Thanks for sticking around. Without objection, I'd like to submit the following statements for the record. A statement from the American Council of Life Insurance, a statement for the National Association of Professional Insurance Agents, statement from the American Insurance Association, statement from the American Academy of Actuaries, a statement from the Property Casualty Insurance Association of America, and the National Association of Mutual Insurance Companies. Without objection, all members will have...
Mr. Chairman, if I may, I beg, Mr. Chairman, that you would give me about 10 seconds to have one comment. I do believe that, Mr. Chairman, I agree with you that there are technical corrections that can be made to Dodd-Frank, but I want to make sure that I let people know that there's another opinion and that while we can mend it, I'm not one who believes we should end it. And I thank you for the time.
And I thank my friend, and I'm glad to hear you think there needs to be some adjustments, and I'll help you with that any way I can. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their response. I ask our witnesses to please respond as promptly as you are able to the questions. We seem to have a problem here when we submit questions. They don't get a lot of attention. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. And with that, this hearing is adjourned.